Hello, everyone, and welcome to a brand new episode of the Indianaut Podcast, where we interview some of India's next best analytical and creative minds who are not only revolutionizing their own field, but at the same time transforming India's entrepreneurial ecosystem one step at a time. Our guest for the day is the founder and CEO of BimaPe, a startup looking to penetrate deeper into the insurance space by focusing on helping customers make informed decisions related to their insurance, including managing their free insurance provided by debit cards and credit cards. We have with us Rahul Mathur. Let us jump right into the conversation. Hi Rahul, I hope you're all settled in.
Hey Gautam, thank you for having me. I'm super excited with this one, and let's get this started.
Absolutely. So Rahul, I think the first thing I want to ask you is before we start discussing other things is what is BimaPe exactly? Tell us about the ideology and the vision behind your startup.
Yeah, absolutely. So BimaPay's mission is to simplify insurance for the Indian consumer. It sort of stems from a fact that even though I've worked in the insurance industry for 4 years now, understanding an insurance policy, going through a claims process, and deciding what product to buy has always been a fairly painful journey. And I was back home in India in the middle of COVID-19 because of the pandemic. I had a chance to speak with maybe 100 or so friends of mine just to understand what their purchase experience was with insurance. And that's really where our sort of mission came about. And the way we execute on this mission is we're right now helping you discover where you have insurance and you're not aware of it. So whether it's your credit card, your employee provident fund, your savings bank account, and a couple of other places. But in the coming 3 to 6 months, you're going to see us launch a couple of India Stack powered integrations, which help you automate and sort of execute on a personalized insurance purchase. So our vision is to make insurance as easy and accessible as mutual funds are today via SIP and a couple of other structures. The simplicity and awareness is probably what we're playing around with in the insurance industry.
That's amazing. That's amazing. And I think I just want to jump onto what you said right now that, insurance is a very complicated process, right? Consumers generally purchase insurance when they're usually forced to, because of some government regulation, for example, when it comes to auto insurance. And, the only time they interact with their insurance provider is when they're filing a claim, which is usually a time of stress and pressure. If someone has died, someone is sick, someone is facing some issue, there's been some negative experience usually, right? So like you said, you've talked to 100 folks, right? So what have been your key learnings so far when it comes to how Indians interact with insurance?
Yeah, it's definitely a fascinating one. And I'd say for most people, they don't even interact with their insurance, right? Because typically it's someone either at their bank or, it's an LIC agent who's come to their house and done an emotional sales pitch. It also really depends, Gautam, on what your target user persona is, right? So for us, it's that 25 to 40-year-old urban working professional, typically earning about 30 to 35,000 rupees or more per month. And this is actually the class of individual, or not even class, the type of individual who now has access to financial information at their fingertips. So they're dabbling in the stock market, potentially
Absolutely.
playing around in the mutual fund space. And now this is the same person who's saying, okay, I've got control over my bank account, over payments, over credit cards, over mutual funds and stocks. This insurance space is still like a fair bit of a labyrinth. I'm
Absolutely.
not sure
Right.
whether I'm making the best purchase. So what we actually see is, okay, I can go online, I can read about all of these policies and everything else, but I still can't make sense of, is this term insurance thing right for me? And let's even begin with, I have no idea what my parents and I have. So what we actually see is insurance doesn't have to always be the push product that it's made out to be. And maybe we've got a bit of the COVID-19 tailwind as well. We're now up to about spoken to 3,500 customers, onboarded 3,500 users at sort of zero CAC so far. That may change in the future. But the one thing that we definitely see is just like how you have people who want to learn about the stock market, want to get the basics right, we're starting to see the same thing on the insurance front as well. So it's no longer buy and forget. Even the purchase process has become like a fairly informed one. And then customers are now asking midway through the policy, Can I change my policy? Well, that's actually possible with new regulations in place.
You can
And
also
that's where
migrate your policy,
BimaPe
right?
comes in, right?
Right.
Yes,
Migrate your
exactly. So
policy.
you can migrate it. And in fact, migration is within the same company. So from one plan to another, you can now also port your product from one company to another company. And one of the things we're hoping to deliver over the next maybe 12 to 18 months is the same magic that you as a consumer may have seen with mobile number portability, and bring that to health insurance, right? So you may have switched from a Vodafone or Airtel to a Geo, fairly streamlined 20-minute
Absolutely.
process. And that's the same sort of magical experience we'd hopefully bring in insurance as well. It's today like a 20 or 40-hour process. Hopefully, we can bring that to about 20 minutes, and maybe in the future, even 20 seconds if you trust us enough. So it's a fairly lofty goal,
Absolutely.
100x improvement. Let's see how that comes
But
along.
but I think what you have is the momentum in the form of inspiration and hope from other sister sectors, right? I mean, like you mentioned, if you look at the mutual fund space, right? I think the innovation of SIP and how easy discount brokers have now made it for you to be able to access SIP products, and for as low as 100 rupees, right, you can start an SIP, or and which used to be a fairly complicated process. I think if we go back like 6 7 years ago, fairly complicated process. No one could even imagine starting it as low, as simple as that. Or if you look at even the payment space in general, how UPI has, like, earlier there used to be the dreadful process of going, registering your pay, waiting 30 minutes, and now it's a very fairly simple process and everything. And I think that's the kind of a revolution you would want in the insurance space as well, right? Because surely insurtech startups are trying to do that, but still there is consumer, like, there's that consumer trust is a pain point, right? Because which hasn't been fully accepted yet, fully accepted by the new age players. So I think that's the kind of hope and inspiration that's acting as a momentum, right? That if it could happen in sectors which were where it wasn't imagined, it can happen in insurance as well.
Absolutely
But
right. I think one way to see it is there two tailwinds, right? Or maybe the tailwind has sort of two components. The one is just like how payments, UPI, regulatory support, right? You're starting to see almost UPI-esque infrastructure emerge in insurance as well. So one of the examples is in the one of the precursors to letting you switch seamlessly from one product to another is to have different insurance companies actually agree on a definition of a condition. And I'm not even kidding, right? Up until a year ago, different insurance companies defined cancer differently. And this really sounds crazy, right? And I say this
it
to you.
does, it
But what
does.
we find what we finally have is a dictionary provided by the regulator saying, here's how we're going to treat different conditions, etc., etc. And for a company like us that's trying to build on top of that dictionary, that lets us build almost like a hypertext markup language and HTML for insurance. And that HTML for insurance lets us build the consumer tech product on top of which you can deliver that cracker user experience of going, 3 clicks from one provider to another. And I'd say another thing is many people are actually not aware of the fact that up until a few months ago, for a standard, off the counter insurance product which you or your parents may have purchased, you had to make an annual upfront payment for it. It sounds crazy,
Absolutely.
right? So
Absolutely.
you couldn't have done a monthly payment for a health insurance product which you bought off the counter up until, I'd say, June of 2020. And just like how SIP, let you make that cut from your salary, so you feel less emotional strain
Absolutely.
with money going
Right.
out of your paycheck. That's hopefully going to be one of the innovations that sort of comes out from the insurance industry, where we let you bundle your insurance products together. And maybe Gautam, is a nice segue for me to tell you what our vision is, right, as a company. So if I let you pause there for a second, right? If you do an SIP into mutual funds today, what the SIP represents to you is a subscription to the financial markets, and depending on your risk, your risk tolerance, that gets allocated between debt, equity, maybe some other form of exotic assets. I
Absolutely.
don't know how wild you are, but in
Crypto
insurance, I
wild.
find it very, very strange that there is a home insurance, there's a car insurance, there's a health insurance, there's a life insurance. But from a jobs to be done lens, what Gautam is subscribing to insurance for is protection, and it's protection against any adverse event. So it's very odd that we force you to make an individual decision, but don't try to bundle all of these products under one umbrella
Absolutely.
and then
Absolutely.
give you a payment plan or some form of personalized payment structure.
Right.
I guess where we really want to go is to make, I wouldn't say a subscription for insurance, but something fairly similar. Because when you subscribe to savings or mutual funds, what that lets you do is start to project out your financial upside. But many people actually think of insurance as an expense. What insurance actually does is controls the spread of your financial outcomes. So
Absolutely.
mutual funds may help you get here, but if some shit happens to you,
It's
insurance
it
will
acts
push
as a
you from
floor.
here
It acts
to
as a
say,
floor.
yeah,
Exactly.
exactly.
Yeah. So if you were to
And that's the
like
lens we're taking.
if you were to like build an elevator, we would like build an elevator pitch for BimaPe. We'd for the subscription model which you just described. We'd say you're trying to build an Amazon Prime, right? An Amazon Prime for insurance, right? One Prime subscription for
Yeah.
everything there is, right?
Pretty much. I think it's a fantastic way to see it, right? And this also is a good moment to sort of remember Amazon in India is actually in insurance. Amazon
Ah.
Pay does let you purchase insurance
Oh,
products as a
right,
Prime
right.
subscriber. So, like, quick FYI, if you're buying motor insurance, Amazon Pay, Amazon Prime may be the best place for you to get it because
Right.
we actually ended up getting our motor insurance for free because we're a Prime subscriber. So this is me giving some.
I never thought. I honestly look at my Prime subscription only for Prime Video, but insurance was something that never came to my. I'll definitely have a
Exactly.
look. Right, but
It's the power of bundling, right? It's
Absolutely.
100% the power of bundling, right? You if you push enough products together at scale, understand your user, segment them well enough, you've built a fantastic business. I think Amazon
Absolutely.
is gold standard there.
Right. Definitely. Let's talk about the insurance sector a bit more. Of course, there's a huge opportunity of the sorts, because I think there was a statistic I was reading that as of 2019, India's insurance penetration is quite low. 3.5% is the number I believe we're looking at. And, so that really equates into huge opportunity. But, another aspect that comes into the picture is the regulatory constraint, that insurance is heavily regulated. I mean, I think every other day in the news, we'll read about some insurance broker or some insurance company being fined by the IRDAI for some reason or the other, and so because these constraints are there, and I think there's only one primary source of revenue in insurance, right, which is your premium, and that is split between all value providers, whether it's a broker, it's a reinsurance, it's customer service, claims processing, whatnot. Everything comes from a premium, right? Correct me if I'm wrong. So given these constraints in the picture, that the addition of additional value providers is essentially splitting the margins much more, and given the regulatory constraints in the form of IRDAI, what opportunities do you see in this space in general?
Yeah, it's definitely I think it's a very valid point, right? The only other place in insurance where you can make money is on the investment income side. So insurance companies take money from you at the start of the year, pay out claims over the course of the year. I'd say in India, most companies, especially those that are operating heavily in the motor insurance space, make no money from actually selling you the policy. Any money they make, assuming they even do, probably comes on the investment side. So that's the whole Warren Buffett float concept, except that it probably doesn't work out as well for these guys, right? Basis their financial statements. And the crazy thing is, I'd say the opportunity in insurance in India, of course, getting distribution right. You mentioned penetration is low, about 4% of GDP is probably the ceiling.
Absolutely.
I guess the more informative one, there's something called a protection gap. And the protection gap in India for an average person is about 93%, which means if an average Indian household lost their primary earning member today, they would only be able to meet 7 rupees out of every 100 rupees of future expenses they see until they get their next primary earning member. So that's probably it probably helps you put that into more perspective, right? Because premium as a percentage of GDP is a fairly like
Yeah, absolutely.
aggregate metric.
It's a very macro number which doesn't really reflect the actual reality. You're absolutely right over here. That
Yeah.
93% and 7 rupees per hundred, that really hits home. So,
Yeah.
that
Yeah.
makes sense.
And in case you're wondering, I'm not the genius who came up with that. There's Swiss Re, the reinsurer, who does all
Right,
of that
right, right.
research. But I think when I look at insurance, right, every part of that value chain can become a whole lot better, right? So I won't comment on the insurance companies on the investment side because I think they're doing really well there. That's more of a capital market style play. Where I think a lot of innovation can take place and actually is taking place right now is on the claims side. So if any of you have actually ever filed an insurance claim, Gautam, I don't know whether you have, I have, there's a ton of paperwork. There's actually an intermediary that sits between the hospital, the insurance company, and wherever you fit in that equation. And that intermediary is called a third party claims administrator.
Absolutely.
You can almost think of this as a 1990s style BPO where the guys are writing stuff down and then deciding whether to make a claim or not.
Right.
A lot of automation can take place there. And there actually are companies that are trying to solve for that. There's startups like Bima Garage, Claims Buddy, Shaw Claim. That list really sort of goes on. That's probably a place where you could save maybe 5% on the overall cost, which is fairly material, right? Because many people actually, to your point, think about insurance as an expense. So in economics, there's this concept of price elasticity of demand.
Absolutely.
And insurance is probably one of the products that has a very high price elasticity. So if the price drops by a bit, the demand potentially will shoot up much more.
So, that's actually quite surprising, given how I've always assumed insurance to be a necessity of the sorts, right? So, one would always assume that the price is highly inelastic in nature, right? Because it's a necessity and some people really want that security and that what's the parachute of the sorts, right? For the safety net for their family. So, it would always act as a necessity and not a highly elastic thing, like you were saying.
Yeah, it's definitely a valid point, and it also boils down to what the persona is that we're describing here, right? So the general Indian populace has like a price elasticity of greater than one, right? Which means if the price shoots up a fair bit, they will run away from it. But people like you and I may absorb like a 20 to even a 40% increase before making that sort of life choice of whether you want to go down with it or not. And at like a macro level, right? So if you're trying to convince this person who's earning like 10,000 a month to part with 100 rupees for a really basic accident and critical illness cover, if it suddenly becomes like 150 rupees, which it could now with new regulations in which affects the scope of cover, it could be a decision between, do I want to continue with this, do I not want? And
Absolutely.
that's probably where, even at a macro perspective, right, getting those efficiencies out, 5% on the claim side, I'd say even on internal processes in the insurance companies, right, a significant part of it is still done manually. They're not moving to the cloud because of all these sunk costs on their legacy infrastructure. And that really does start to take a toll, right? After a point, you're maybe spending 60% of your IT budget on keeping the lights on in a server somewhere. And the same problems you may hear from all of the neo banking guys about the banks. You can probably
So
replace banks.
I was absolutely mention I was about to mention this only, that how in neo banking in India, so because of the RBI, it's not fully allowed to 100% own a digital bank, right? So Indian neobanks are basically, what they're doing is that they're distributing and basically offering the services of a partner traditional bank, right? Which actually has that infrastructure, like those shackles, right, of the sorts, the old infrastructure, legacy infrastructure shackles, they're having that physical presence, right? So I think that's exactly what I want to talk to you about now. That let's talk about innovation in the insurance space in India, right? So technically, the current insurtech space in India is being dominated by aggregator platforms such as Policy Bazaar, right? And I think I read this statistic somewhere that Policy Bazaar makes up to 20% of the country's overall life insurance cover and has, I think, 150 million visitors annually, right? And besides this, we are also seeing the rise of sachet insurance and embedded insurance, with the likes of ACO collaborating with Ola. So, that will be an embedded example, right? Or even recently, with Plum Health collaborating with Razorpay by offering group cover programs to, what do we say, to folks who use the payroll processing software from Razorpay, right? Opfin. So, we're seeing a lot of innovation in this space. We're seeing a lot of, how do I put this? Just that the people are soon realizing that the problems which people face traditionally with the banking sector, why they can't innovate in the banking sector, they're seeing that over here as well, right? But what comes in this picture is the regulatory aspect as well, right? Because in India, if you want to start something in the insurance space, you need to be registered with the IRDAI in one form or the other. Although a lot of startups are doing that, like without regulation, like they will face the scrutiny one day or the other. But they usually require that. Whether you become a web aggregator, or whether you become a corporate broker, or whether you become something as simple as a corporate agent or a broker or something like that, right? So, what kind of innovations do you see in this sector going forward? The sorts.
Yeah, it's definitely a fantastic question, and one which I think is probably going to explode in the next year or so is embedded insurance, which you mentioned is this concept of insurance being a feature in a overall offering and not like a
Absolutely.
standalone product. And at the same time, you're seeing like that embedded credit or embedded lending with companies like Rupify. You're also starting to see
Absolutely.
embedded insurance with
We've
the
we've
likes
had
of
we've
this
had
Discovery.
Groupify on our
Yeah,
podcast before.
yeah,
Absolutely.
exactly. So it's the same idea there, right? And I think the interesting thing there is more around how does a player like an ACO use their license where they can hold risk on their balance sheet to build a product which is tailored to the channel, right? Because what you typically see in insurance, Gautam, is someone says, okay, sachet product, let's just take the shampoo bottle, let's cut it into 20 pieces, pour the same damn shampoo in the sachet and go sell it, right?
Absolutely.
Probably isn't going to work with insurance as well. They're trying some stuff like pulling individual components from a health insurance policy as a separate product. I've been told it isn't sticking along very well, but let's
All
see,
right.
right? It's not an easy thing to crack because the biggest challenge in insurance versus lending is in lending, if it's embedded well, someone's giving you something before they take something from you. So it's a very tempting and exciting thing, and it will
Absolutely.
see large adoption. Whereas in insurance, right, it's not even as bad as me saying, give me something and I'll then give you something back. It's me saying, Gautam, give me
Keep
something today.
giving.
Keep giving me. If something happens, I'll pay you. But
I'll pay
guess
you.
what? I will pay you only if this happens. If this happens, well, I'm not
I
going to
won't.
pay you.
You don't
And
know.
by the way, when I pay you, I'm also going to take 20% of that back. By the end of it, the poor farmer there is like, then why am I even taking this from you? And this is what happens, right? So the whole embedded lending in the whole agri ecosystem in the neo banking ecosystem is a massive hit, right? Because you're giving the customer immediate gratification, they're getting something with low downside. In insurance, you're asking someone to part with money, and you're asking them to part with money under the pretext of you potentially paying them in the future. So it's a slightly harder game to play, which is why it takes time to build not only a brand name, right, but also build uh, the right sort of plumbing to support distributing the right products to you.
Absolutely.
But I think you will see a fair bit happen in embedded insurance. You can see it even with players like the NPCI, which manages the Rupee rails, and the fact that they are also distributing insurance, which just shows you how everyone in the country wants to sell you insurance, right? It's an exciting time to be in the market,
every
right?
every company will be a fintech company, right? I think that's how
Yes,
A16Z puts it,
yes,
right?
yeah,
That's
yeah.
probably
I
what will
think
happen.
Angela Strange is spot on there, right? And
Absolutely.
maybe just moving beyond like the fintech side, right? I think 5 years from today, we revisit this every year. Every aggregator of demand, right? So whether it's a Cred, whether it's a I don't know, Swiggy, a Zomato, or something, even potentially a Sheroes,
Absolutely.
they have their own neo bank. They may have their own. insurance brokerage setup, because that's what happened in China as well, right? So even the big tech companies like a Tencent have their own insurance brokerage, their own mutual fund setup.
Well, I think that's something that absolutely makes sense, right? You've amassed an audience, you've amassed a loyal following, you've amassed so much data, right? You have so many data points related to a single person, whether how regularly they interact with your platform and how regularly they make purchases, right? For someone like an Amazon or someone like even say Cred, right? How regularly they are paying their bills, right? When you have that audience, you have that data point, you have those data points, right? It makes sense to monetize on those folks in each and every way possible, right? And I think this is a kind of a conversation I had with Sairi Chahal as well on our platform, where she also mentioned that in the future they want to offer financial services and financial products to their users of Shiro, right? So it makes sense to monetize on your audience in when you have those reliable data points and you have that reliable information, right? And you can look at your consumer behavior and you can see exactly what fits in where. So I think that's great, and this really reflects back to another conversation, and we'll be releasing that episode probably after this one, and that's with Sahil Kinney from Setu, right? So Setu is also building financial infrastructure products, right? So absolutely, I think embedded finance, embedded insurance, embedded lending. I think this is the future. Embedded is the future. Sachet might not be possible, but embedded surely is the future of the sorts.
Yeah,
Absolutely.
definitely, right. I think at the end of the day, a lot of finance is about trust. And even if you're giving someone cash upfront, or in the case of banking and insurance, maybe not lending, it's 100% business or trust, right? If you're parking money with someone in a fixed deposit, well, the idea is bank should give you security. Do you trust the platform you're banking with? Hopefully you do. And I think that there's a lot of work to be done there. Whether it's players like Setu doing the WhatsApp API banking. We now know for a fact WhatsApp is getting into insurance distribution.
Absolutely.
They literally have the best sort of platform to do something like that. And to your point, right? You've already sunk the CAC to get the user on the platform. You might as well now grow the LTV.
Absolutely. Right. Definitely makes sense. But I sure do hope, what happened to WhatsApp when it comes to UPI, right? Whether what can be considered 2.5 years of a regulatory hell of the sorts for those guys. I sure do hope that doesn't happen. Like, that story doesn't repeat itself when it comes to insurance, because I think it's funny. I saw this tweet in the morning only where someone was saying at the beginning of 2020 that, mark my words, UPI and WhatsApp will be the biggest thing, and we'll see them overtake Phone Pay and Google Pay by the end of 2020. And here we are, 2021, and they've now been allowed to launch UPI in a very graded manner. So it's actually, I surely do hope the same thing doesn't happen when it comes to insurance.
Yeah, it's definitely going to be an interesting one. And the whole antitrust thing, whether it's WhatsApp, whether it's Geo, whether it's Google, I think everyone's been pulled up for one thing or the other. And it'll be interesting to see, right? Because on the one hand, something like a WhatsApp allowing full-fledged integrations of banking and insurance is probably exactly what we need to turbocharge maybe not just financial inclusion, but also financial awareness. And if that gets blocked by the regulator, yes, it probably does let a couple of Indian companies, break out and become successful. But there's a question about at what cost does that happen to the average consumer, right?
Absolutely. Are you hindering the growth in general of the entire ecosystem for the sake of limiting the dominance of one company? It's I think a very traditional antitrust problem, right? That from the consumer's perspective, in the short run, anti monopoly or dominance really helps them out, right? If Amazon is entering a space and they're pushing out all competitors, they're doing that using a price advantage, right? So in the short run, it really helps the consumer, but in the long run, will we see ramifications of this? For example, if something like a WhatsApp's UPI were to go down, if there's a system outage or something like that, or if and something like that, and suddenly the entire ecosystem is being hit, right, majorly. And I think that's something that happened, right? I mean, in a very indirect way, when Yes Bank was under moratorium, right? So suddenly the UPI systems for Yes Bank, every Phone Pay went down, right? And just in general, you know how you were talking about how financial services are a business of trust, right? And suddenly people were very skeptical about where they're going to park their money, right? Because you
Yeah.
can't access. And Yes Bank has always been considered a highly reliable bank, right? And suddenly you can't access your money on Yes Bank. And I remember I was in office and I was talking to colleagues, and they were unable to like draw their salaries from the entire thing, which they had the money they had parked over there, and just that entire uncertainty. It was actually scary to think about it. Luckily, I did not have a Yes Bank account.
Oh man.
ICICI for life, but but yeah.
Oh man. Yeah, I think the whole systemic risk which we saw with Yes Bank is one thing which the RBI is trying to get rid of with that new umbrella entity in the payment space, because NPCI could
Absolutely.
also be a single point of failure. And then you're right, even on the institutional side, do you become too big to fail, right? We've seen the implications are too big to fail in the financial services market with Lehman Brothers, Bear Stearns, and
But I think I understand the too big to fail conversation, right? Which started off that, if even a single large entity fails, this suddenly shocks across the ecosystem. And, there are like points of failures across the space. And to your point, what you mentioned, the NUE thing, right? The new umbrella entities, which RBI is now allowing to be set up, like as parallel to the NPCI. And I think another reason why that is happening is because the government has really toyed with the NPCI a lot by firstly the just like putting certain regulations up in place, whether it was like zero MDR, and suddenly, and because NPCI is a non-profit, right? They can't. So that they've really toyed with the NPCI a lot, and I think now they're like, you know what, maybe we should just let them set up a couple of competitors, let the market take care of the entire situation rather than us regulating it every now and then. But yeah, I definitely. I think the first thing I want to ask you is that this is something you've tweeted about quite often, is that you currently reading or have recently finished the book Range, right, by David Epstein, right? And I also know that you're building building the right product and engineering team is a core focus of yours leading into 2021, right? And keeping the generalist and specialist debate in mind, as an early stage startup founder, what kind of a team do you envision BimaPe to have?
Mhm. Yeah, I think so. When you sort of start out with like an early stage team, you try to make sure that you want to move fast, but you also don't want to sacrifice quality. So you try to look for people who meet the right now bill rather than the right bill. So spending 6 months to find your next engineering hire probably will not work too well when you're a direct to consumer fintech, right? You have to move a bit faster. So one of the things you sort of try to look for is this a person whom you feel if the company explodes at scale will has like this one core skill which the organization can always benefit from, right? So this is what people describe as a T-shaped person. So you're fairly good with a number of skills, so you can work at an early stage company, right? You've got a baseline of knowledge across a couple of things. But then there's one real vertical where you are an absolute pro, or maybe close to being a pro, and if the company scales, you can focus on that one thing which you're a pro at. And that's one lens you'd probably take when you're structuring that early product engineering organization. The other thing is you'll obviously come across a lot of people, great pedigree, etc., etc. But you do want to also optimize for the person who's almost got the profile, is hungry, wants to learn. And I've typically found like those sort of people work incredibly hard and tend to overachieve. And one of the reasons for it is an early stage startup journey is a little like Brownian motion and not like a straight line. So you want to have people who've also wandered around a little bit in their career. So they're comfortable with this whole ups and downs, mix and match of a startup journey. So we have some engineers who are probably right now responding to email support tickets from customers. A Google engineer may not want to do that, right? Because they say, no, I want to write code, I want to write elegant code, I only write elegant code. Probably not going to work if you're a direct to consumer fintech company. That's just the one thing I would say, right? Is look beyond, someone's sort of GitHub repository, look beyond where they've worked. Just try to see how they are as a person. So if you're recruiting, give people written tasks to do. So at BimaPe, we start out, after seeing whatever nonsense they send us in an email, which we don't wait a lot, we ask them to fill in like a 10-minute survey form, which allows us to learn a little bit about who they are as a person, what they do in their free time, how have they responded to feedback in the past, have they given anyone feedback in the past, a new skill that they've picked up, how do they teach themselves. That just gives you a feel of what kind of soft skills they have for the workplace. And the final step after doing that video interview with the team, right? So not just me, but pretty much the whole team, is to then put them through a actual assignment. So if it's an engineering thing, you give them like a take-home assignment, give them a certain amount of time. But I cannot emphasize like how important it is for every hire you put through in the first 10 to 15 people to be not only someone who's technically qualified, but also someone who you're really comfortable spending like a solid 13 to 14 hours a day with. Because if you find them annoying for whatever reason, or you feel they're like a toxic person in the workplace, right? You've just killed the company at the start itself.
Absolutely.
That's a long-winded answer, but we can jump into a couple more things in detail if you'd
No,
like.
I think the first thing you mentioned about how a Google employee would not be comfortable working in such a scenario, and I think the one thing that comes to my mind over here is that I mean it's a pretty indirect example. It's an indirect example, but if you look at data science, right? I think the anyone who actually practices data science, they'll tell you that 80% of data science is just cleaning the data, right? Because you're gonna get data
Mm-hmm.
points from various places. You have to clean that information, and then you can process that and actually get valuable insights from that. And I think that 80%, that cleaning the data, that is something that isn't theoretical, that is practical in nature, right? If you've been around to a couple of places, you pick that skill up. If you've worked as an engineer in at a variety of places, at early stage places before, so you know that things will never be organized, things will be chaotic in nature, but you just have to adjust to that chaos and flow with it, rather than keep
Yeah,
fighting it, and just always be that, not be able to just mold yourself when it comes to a situation of the sorts. I think
yeah,
that's what matters. I think that's what you're trying to look for, right? You want to look for the
yeah,
people who are able to mold with the situation, mold with the ups and downs, and then just keep moving forward of the sorts.
yeah. Exactly. So I think within the company, we describe this as we're looking for a systems focused engineer, not a process focused engineer. And what we mean by a systems focused engineer is you're willing to get in there when there is no system, create the system, right? So whether it's creating the database architecture, understanding the customer's job to be done, the company's objective, and deciding how to structure whatever piece of internal architecture you're working on, right? Whether it's the usage data, whether it's the developer logs. And if you're willing to get in there, build a system and help other people understand why your system makes sense, early stage is the perfect place to be, right? Because it's high ownership. I wouldn't say high pressure, but high pain because you're building 0 to 1. But if you're a process person who likes to say, okay, I want to have someone clean the data for me, give me the data in this format, I want to then run the models on it. Probably later stage company or maybe established company is the way to go. And there are different
Absolutely.
kinds of people, right? People at different points in their career would also be at different places in that spectrum.
I
If you want
think
to
yeah.
look
I
for
think if
someone
you're
who's
I
more,
think if you're young and if you're young, you're hungry, you can work in that early stage. But as you like, when that age factor pops in, you want more security, more stability. I think so. Yeah, I think there are a couple of trade-offs you look at. When it comes to people, and companies look at when it comes to people, and people when they look at companies.
yeah. And the same thing can also happen, right? So you have what people in the industry would call a late bloomer. So it's someone in their mid to late 40s who's worked at big companies all through, now is
Right.
financially secure,
Right.
and now wants like ownership to build a tech stack from the ground up. I've seen this in previous roles. And it's an interesting mix, right? That's the kind of person who maybe cannot work 100 hours a week because of family commitments, but maybe is so experienced that they can make up for the sort of quantity of time with really high quality work. And I think at scale, like a Series A, Series B company needs a nice mix of those kinds of people. see the aggressive ones and the structure, process, been there, done that kind of person.
Absolutely, absolutely. That makes sense. Absolutely. Rahul, let's talk about you in general now, right? So, I think you're as old as I am, and, you're already breaking barriers and crossing thresholds when it comes to being an entrepreneur. So, what have been your biggest lessons on this entrepreneurial journey so far, and what advice do you have for other aspiring Indianauts?
Oh yeah, I've thought about this one a fair bit. I think the first thing I'd say is, especially if you're a younger entrepreneur like me, you've probably used to being a team contributor, or in my case, an individual contributor. So I've always written code, built models, done stuff independently. All of a sudden, you're now part of, you're actually running a team. And the independent contributor mindset is, if work exists, go there and do it yourself. Whereas the manager mindset is, if work exists, can
Allowed
someone else
someone.
in the team
Allowed
do it?
someone. Right.
Yeah, delegate it to someone, right? And
Right.
delegate based on what Andy Grove calls task relevant maturity. So if someone hasn't done it before, show them how to do it once, show them how to do it twice. As they get a grip of it, outsource it to them, right? You want to focus on more what people would call like the strategic stuff. I don't know what strategy really means at the early stage, because you're doing everything. But that whole thing of don't be ashamed to delegate.
I take slight offense to that. I worked as a strategy associate at two different startups, early stage startups. I take offense to that. But moving
Oh,
on. Moving on. Yes, I
100%,
think
right? The whole
if I'm in
delegation
the
thing.
assuming I'm in the job market right now, I just want to say that even though Rahul has like completely like shat on my entire work like so far, I'll just say that I'm a pretty suitable job candidate, and I think there's a requirement for a strategy person at early stage startups. But moving along.
Yeah, I'm fairly certain. Right? I think it also depends on what kind of a company it is. Right? So if it's a neo bank, if it's slightly more aggressive like lending company, where there are sort of, I wouldn't say templates, but past examples of go to market, having someone who can analyze that for the founding team, help them with that, super helpful, right? It's when you're in weird situations like us that no one's done this before. Yeah. So saved myself there. But number one, delegation, right? And don't be ashamed to delegate. It's a leverage on yourself. It's not you being incompetent. The sort of second thing is also being aware of when stuff sort of exits the barriers of your skills, right? So I do not try to dabble day to day in sort of the core platform and engineering work, because I know that persons on the team who are far more qualified than me. So you want to be armed with basic knowledge, but you also don't want to get too much into the weeds of what they're doing and give them a bit of flexibility, right? So I think the nice way to summarize it is arm yourself with knowledge about what's going on in the company, but don't poke your nose into everything, right? Give people that creative independence to go out and build stuff. The third like lesson I have learned is always try to learn right from customers. So in every conversation, in the early days, wherever you can, try to be the person who is running the customer interviews, see how they're interacting with your product, because pretty much you are the most emotionally, financially, and in every other way vested into the company. You will pick up on stuff that other people cannot pick up on. And do not delegate like talking to customers, finding your first 100 customers. That should 100% come from you or from your co-founders. I guess normally people give three. I might just add like one more, and that's mainly because theme of the podcast is like fairly younger founders, with two of us discussing it. People may like shill, oh, it's good to be 40 building your first company, it's good to be 30 building your first company. There's never really like the right age, right time to do something. If you've got an idea, go out there, test it. It's easy to do low cost testing and then decide, right? Because you will not know whether the market timing is right, which is what typically is a precursor to company success. until you're in the damn market. So one thing I can tell you is it's better to go out there, try something for a few months if you've got the financial buffer, and then make a decision on whether you want to double down on it or explore something else. So just uh, get stuff done. I would use the other S word, but I'm going to go with get stuff done as like the final message for other people.
Absolutely,
Absolutely.
absolutely. That makes sense quite a bit. I think the last thing I want to ask you is about BimaPe in general. That what's next in store for us for 2021. What growth plans do you immediately see, or what's in store for us immediately after, say, February, for example?
Yeah, it's definitely an interesting one. So we're working towards like a fairly big milestone in March, and our 3 month roadmap is just like we made like a pretty fantastic. We think it's fantastic. Customers said it is. I'm not saying
Absolutely.
it's
Absolutely.
fantastic. It was
Absolutely.
it was a fun experience with the whole know your card, discovering the hidden insurance benefits there. We're hoping to deliver the same thing across the board with different insurance products you have. We've built something, still building it in-house, called the policy deconstruction algorithm, which simplifies your insurance policy for you into its core components, gives you the key action items which you can then share with your family in the case of an emergency. We want to make sure that by March end, we have that ready for a couple more insurance products and actually launch what we're building in stealth mode out into the public, because we're also getting a bit frustrated. We're still like part stealth, part out in the public. That's probably the one thing you'll see from us by March is what we're actually trying to do in insurance, simplify it for you and your family, and just get the product out of stealth mode, man, and then see where to go from there.
Absolutely. No, that's amazing. And
I really hope that we get to experience that product as soon as possible, because based on the offerings we have seen so far from BimaPe, I think we have exciting things in store for all of us. And thank you so much for joining us today, Rahul. We wish you and BimaPe the very best for the future. Thank you so much, everyone, for joining us for this episode. The Indianaut Podcast is available on YouTube, Apple Music, Spotify, and Google Podcasts. Be sure to follow us on Instagram and Facebook to receive all updates on the upcoming episodes. We'll see you in the next one. Thank you.